Okay, morning guys. Excuse me. Hope we're all well, up and running, ready to go. Sorry, just having a sip of my coffee. Okay, welcome to TradeSetup and the morning playbook. What are we, the 30th? End of our financial year, end of the quarter for the US. So expect a bit of argy-bargy today on the markets. I think there might be, I'm really not sure which way to go, but generally the end of financial year, there's a lot of window dressing from big funds, investors, things like that, just to, might be some end of year tax off write-offs. We'll see what happens on the day. So a bit of fun last night. The markets pretty much in the Dow opened opened and went straight up. So we had a bit of negativity and a bit of chop, quite a bit of chop during the European session. Asian session wasn't too bad. I mean, it's pretty much we opened down and trying to sell down, but you can see that we kept getting some buyers stepping in, especially I think at one stage about 3 o'clock, an hour before the close on the ASX, we were down 140 points and bounced 60 or so, or maybe 130, 40 points, bounced 60 or so in the last hour or so, and probably 15 or 20 of that was just in the match off in the last 10 minutes. So a bit of playing around, would expect something like that today, but we'll just see. Now, I'll go over the major market. So you can see the move on the Dow. That was the open, 2330, that candle, that green candle there. So prior, we were talking yesterday about this level, this support level coming in, and it's that confluence of rising support and a key horizontal support through there, which prices have tested a few times. It traded up and through, chopped around there. This was back on the 20th, retested before we got the rally, come back into the zone, retested, and that was that trap that we saw after the big sell-off. That trap was set with a push through, and then it rebounded straight back up again. And then we come back down and tested it in Friday's session. So Monday, we've rebounded back off. So we'll have to see if lower highs hold and we start to press through this zone, or whether we may get a bit of a retest and build a higher low, and up we go, back up to this zone there, you would expect anyway. At the moment, this action off this high, this inside high, which is a key lower high at the moment, is holding the market down. So maybe a sort of push up through 25,757 might trigger some buying, but I would expect to see a higher low. I mean, at the moment, the markets are sort of just popping straight up with no real pullback to trade off, and it's kind of hard. They're pulling back, and you're looking for that pullback. You're getting the market edging lower, and then bang, up we go, especially intraday, which we'll talk about potentially later. We're probably going to I'll probably do a video later on today about some intraday stuff that I've been looking at, and some setups that some traders did yesterday. I think it's some from the day before, Friday, Thursday. So I might do a video and I'll send it out to the email group anyway, so it'll be uploaded onto YouTube. So just keep an eye out for that. Now, that's the Dow. The S&P was pretty much the same. It rebounded off that support, but like we said yesterday, that S&P has broken that uptrend. Whether this is going to hold, or we're going to get this inside support zone holding as well, and price rallying off there, I mean, it's yet to be seen. It's too early. The market is still well and truly supported by stimulus. The stimulus junkies are still out. They're still expecting another round of stimulus, but it's getting held up. So look, the sell-off could come when the talk of stimulus fades, okay, and then everyone realizes that they well and truly factored in the stimulus packages at current levels, and when you start to look to get into US earnings reports, then earnings come out bad. You wouldn't expect them to be good. Come out worse than expected, then there could be that sell-off, because the market's going to have to readjust sooner or later. All right, but as long as that stimulus talk continues, I think the bull is going to continue to come out and sort of provide some sort of support, whereas the market is swinging quite a bit at the moment. You'll see big sell-off here, rally back up, chopped around in this stage, and then sell off again. We may come all the way back. We may hold a lower high. At the moment, we just don't know. There's still arguments of both cases at this stage. I don't like the S&P as opposed to the Dow. The Dow looking a bit more supportive, and it's still at that zone, whereas the S&P is looking potentially like it could go sideways from here, just because you break a level doesn't mean you have to go down. And clean out these buys. It could mean you get the consolidation sideways, and then you up you go again. So you correct sideways rather than correct down. All right. So we're still looking for these key levels that they're going to hold. The longer they hold, the more likely we're probably going to push back up again. But if they start to come into fire again, there's going to be some heat. And depending what the news flow is going to be to trigger retail selling, we'll have to wait and see. Now, XJO, we'll go over that. Just want to make sure I'm good for time. XJO is down into this zone. We've got this support zone, which it was sell off yesterday, which you'd expect it to bounce back today to some extent. I think SPY futures were pointed about 70 or 80 points on the upside, opening 70 points stronger on the ASX, which would, let's see, what does that take us to? 58. Right, back up here, is that right? 58, 5800. 5880. So sort of back up to this zone if that's the case. So if that's true, then we're going to open up back at 50. Sorry, what am I talking about? 5880. So you're halfway back in this range. Whether we can hold under this falling support, I don't know. I think the bulls will give it a bit of a nudge, but it may be a weaker than 70 point open. That's going to be, we're going to find out in the next 20 minutes or so. The ASX, we're still holding up off that zone, that bid zone around 57.25 thereabouts, and we're capped at 59.90. So it could keep chopping around, much like the S&P. We could just keep chopping around here, holding those levels, and consolidate sideways. I mean, if these lower highs continue to hold and we can't actually break up today, at the end of the quarter, end of the year, then we may find some selling triggered lower. I mean, it depends what the overall market's doing. At the moment, everything's linked at the moment where, the US shares, if people start buying the shares, or the linked markets are moving how they've been moving the last few months. So if we go into the dollar, which is actually a bit strange, we got the dollar sold off slightly and had a big bounce back. Okay, and that was basically the start of the US session. Some decent data come out. I think it's home sales in the US was better than expected, which launched the dollar up a lot stronger than what I thought would have been the case, but it still is capped at that zone around 97.70, this resistance zone there. So, I mean, same thing. We could just chop around here until the market starts finding a clearer direction, whether it's up or down. Markets need to find a clearer direction. At the moment, up at these highs, especially the dollar, you look at the Aussie, and most markets were up at some highs where a lot of good news has been factored in, and the markets, it doesn't have a big reason to come down just yet. I mean, there's more than enough fundamentals to come down, but the things that have been pushing it up have not stopped. Stimulus, basically stimulus. There's still talk of more stimulus. It'll be interesting to see how it goes with the elections, US elections, what the market reacts to. And if it reacts to negatively with Biden's if he wins, if Trump doesn't win, how's the market going to react? Remember last time when Trump got voted in, market was heading south every time there was talk of him coming in. As soon as he did come in, bang, up we went. It was just a massive setup. Massive trap. So we'll have to see what the market's sort of trying to factor in there. And then you've got earnings. I think there's a few big things coming which could weigh down on the market. Considering, I mean, if they stop talking about stimulus, and there's no stimulus potentially to prop it up, then there's going to be a bit of a concern. Now, also the Fed and Trump's administration, two different corners of the ring. They're still talking, V-shaped recovery. Trump's administration, it's all good, but they're going to talk about they're so biased, it's not funny. All right, but then you've got the Fed Reserve, which is probably talking, you would say, more sense. Say, don't expect too much of a recovery that everyone's trying to factor in. They're basically saying you're factoring in too much. There is too many concerns about, if we can't get this pandemic under control, then the market's not going to be, we're not going to recover as quickly as what everyone's sort of making out to be, or the V-shaped recovery enthusiasts are making out to be. So that's US dollar. We'll go over Aussie. Aussie to me is still getting weighed down a bit. It's just that this action is not, off the highs was great. We've spoken about this. I'll just go back a bit. Off these highs, that's 70.50. We've had this inside double top, or we call it retest fail, and the market ran down as expected. But I would have expected something to cave in from here, but that trend is still getting held up. So there's a good chance we just break up and through 68.90 or thereabouts, and we start to press back up and retest this high, or we might fall short and get a lower high. But again, this market is still, with the US shares still going up, there's not any reason to sell the Aussie just yet. Okay, if there's a crumbling in the US market, I mean, we've had some big moves down, but they've been bounced back up. Like 700, I think, on Thursday. Friday was a big night down, and they've come back and fought back on Monday night, plus 500 and something points. So, with that in mind, it's hard to really jump in and load up on the short side, just because that this market could pop quite easily. Euro is looking, it had a big bounce, a big push up on the dollar weakness. Then once the dollar bounced, bang, straight back down again. But it's still holding, this longer term trend up. So there's a chance that any of this negativity is going to be negated, and we're going to head straight back up. I'm going to retest these highs again, a bit like the Aussie. All right, but I would suggest that the US has got to probably back off from where they are. US dollar has got to back off from where it is. If we just take a look at the others, we've got gold. Gold looks poised to go. So in saying that, when it looks ready to go, I'm probably going to be a seller. I don't trust gold at the moment. I think that looks like a perfect setup to go long. You break out here, more than likely it's going to break out, wash out, and then start to settle. I mean, again, what safe haven reason at the moment is there to buy gold? I mean, everyone, you can talk about it. You can say it is a safe haven, the market's poised to go over, but it's not. We just rallied 500 points and gold was still holding up. And the US dollar rallied and gold was holding up. So you got US dollar, pressure and equity market pressure. I mean, the market's probably trying to factor in. Now, if equity market goes again tonight, you'll probably find that gold will cave in because the US dollar is probably going to, it'll be interesting to see if the US dollar does back off, which way gold's going to go. But either way, that support there at 1766 is looking like this market, consolidators ran up off this low, off the support around 1750, ran up, consolidating just below the highs. That's a sign that it's going to go. Okay, so it might be worth just buying, buy the break with your stop below. There's a chance that it does whip up and whip back down again, like it's done many times before. Here it looked like a potential setup. You buy the break and then bang, straight back down again to whip you out. So just be wary of gold. It is, the momentum's potentially heading back up. We're getting a bit extended up here. But either way, that does look, technically, looks okay. Aussie gold. I just lost my gold now. No, there you go. I don't know what happens with TradingView. Sometimes I think if I drag it across, it shows the chart and disappears off here, off my list. Aussie gold. Aussie dollar pressure should be supportive of gold, obviously, of Aussie gold in Aussie dollar terms. It's still trending higher. It's in probably potential resistance zone, but it is still edging higher. So key support, not really key support. Your key support would be down here. Key lows, there's inside levels just in here at around 25.70. Then you got lower down to 25.50 is the anchor to that uptrend. We may press down, chop around and go again. May wash out this low and go again, or we may just head straight up through these highs at around 25.90. All right, so I'm banking that it's just going to continue going up, which is good because it's good for the Aussie gold miners. What else we got? We got crude and copper. Now, even under the US dollar strength, you can see crude rallied. Crude rallied sometime middle of the session in the European session and just took off, and it didn't look back. So it didn't look phased at all by good day trade. I'll put up, like I was saying, Alex, I'll put up some information. I'm going to do a video a bit later on, just go over some intraday trades, just what I was looking at and the reasoning behind it. So it'll be a short video, but it'll give you some idea of what we could be looking at. For intraday, depending on what you're trading, I'm mainly trading indices. So my major concern for intraday is just indices. And they're not kicking off yet. We'll get some action probably in the Dow soon. On the Aussie Open, then you've got 11:15 when the Hang Seng opens. There's a bit of action with the Asian markets start to kick off, and then later on around 4 or 5 p.m. Aussie or Sydney time when Europe opens, you get some good moves. So that's the times we're sort of focused in on. Crude, like I said, wasn't really phased by US dollar strength. It did press up. I don't consider this as a key zone, but it is a zone where we found support previously, popped up, come back down and retested a few times, and we chopped around through there and then fell away. from that same zone around 39.40, and we're back up there now. So the fact that this could be extended, we're starting to run out of momentum. We may see some lower highs. We may see the market press down, and then if we can get a higher low come in, that's going to be supportive of higher equity prices. Because I think they're looking at some decent enough news out of China, economic growth, or they're getting back on track in China. Their massive demand for oil, and that's what's been supportive of the higher oil price. Now, copper is another one we keep chatting about. Look at that; it just keeps holding these inside levels. Okay, holding higher lows, holding higher lows. So that goes back to the fact that this wouldn't break down. You would have thought it would have break down up near the highs, considering what the market was doing, the US dollar pressure on the upside, but instead it's getting held up. It's still pressing higher. So that plays into the idea of increasing demand and stronger pricing, economic recovery in essence. Now it's going to be interesting to see what like we said before a few times, I don't think the market's going to go into meltdown mode because economy is going back into lockdown, because I don't really think that the lockdown is going to get too out of hand. I think there's too much riding on it, this economic strength, to really start to go into heavy lockdowns. But I mean, only time will tell. All right, guys, that's about all I wanted to go over now. I'm going to finish up there. Like I said, any questions you may have, send us an email to support@tradesetup.com.au, and check out the website and sign up to the newsletter to get anything. And even if you subscribe to our YouTube channel, you'll get anything we post on there. You'll get a notification when it goes live. All right, so thanks for joining me. Have a good day, and we'll speak to you again tomorrow.